Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng, 1% uptick. Taiwan Index, 0.6% of uptick.
The outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago.
25,330 is the upper level. 25,000 roughly is the downside level.
The Nifty opens at 25,175.
Banks should see a decent turnaround from a decline in profits in the current year to decent growth next year.
Dubai's Emirates NBD bank is finalizing a landmark deal to acquire majority control of RBL Bank.
Staying focused on delivering profitable growth and sustainable return on equity.
JM Financial calls Persistence quarter a near perfect quarter.
Obviously, very interesting time to sort of be part of the market.
We are above the 25,300 mark. The bigger question is whether we stay on to those levels or not. Nifty is comfortably above the 25,350 mark. We are at the day's high, and the push continues actually.
Well, that was the day so far, and it's quite a turn in the sentiment. After opening flat, the Nifty and the markets actually are moving up and up. The Nifty's crossed 25,300, mid-caps up over 1%. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me, Ekta and Mangla. Hi, guys.
Hi, it's looking good for the markets right now. You know, we're above the levels that we saw on October 10th, after which we saw a bit of a decline right now.
25,330.
25,331, yes. And now we're above that. That's a good part. And it's been led by a lot of these consumption-led names. Yes, of course, Nestle reports its numbers tomorrow. Stock is higher ahead of that. Asian Paints on account of lower crude prices. The season is changing, festive season and all of that and stuff. Look at names like Bajaj Finance, up nearly 4% on that one as well. So consumer-related, consumer finance companies, discretionary names, all of them doing good. So it's feeling a lot better. And even on the market breadth front, you have nearly 2,000 stocks advancing for about 1,000 stocks which are declining. So that's a reversal that we saw from the last few trading sessions.
Hi, guys. Yes, definitely. And, you know, if you just move a little away from the equity market, you'll see gold shining and continuing to shine. So that's where the festive season is also probably, coming through. But interestingly, Manisha did mention that demand for gold is down around 15 to 20% in the festive season. But nonetheless, back to equities, the other big pocket which seems to be shining in today's trading session is the entire banking space. And it's not only the Bank Nifty, which is up around 0.5%. If you look at the Nifty PSU Bank Index, that is up around 1.5%. And you see a lot of these PSU banks which are higher in today's trading session. So case in point would be, say, a PNB or a Canara Bank or a Bank of Baroda, all of these stocks which are managing to see some amount of traction on the upside. So interesting day. We have earnings which are being rewarded, such as ICICI Lombard as well as Persistent. And then we have the banks which are also managing to gain on the upside.
You know, what's interesting is that in Europe, the French index is up 2.5%, and it's driven all by the luxury companies. So they have this Stocks Europe Luxury 10 Index, and that's up 6.2%. And the big mover is LVMH. They came out with the numbers. It's better than what the street was anticipating. So LVMH, if you get that, I don't think we have the share price, but that's showing a jump of close to about 13%. Christian Dior, Burberry, Moncler, all these are surging in trades. So it's consumption even in Europe.
And how aspirational.
It's all luxury.
The last couple of quarters for all these luxury companies weren't very good. And that's largely because of a couple of factors. It was the post-COVID luxury boom was trying to get settled in. So we saw a decline in LVMH share prices for about 2.5 quarters before that as well. So now on a low base and perhaps luxury demand catching up once again, China coming back as well should be factors that everyone's looking at. So it'll be very interesting to see how it goes. Though, LVMH, Christian Dior, Burberry, all these brands wanting to make a big foothold into India, but it's still China that drives most amount of revenue.
Absolutely, and you have to also consider the rupee depreciation as well. Everything gets expensive with the rupee depreciation.
For you, nothing is expensive. I don't buy any of that.
But in any case, that's a topic which...
But everyone's talking about that, how there is wealth effect in India because Indians have the maximum store of gold. So now that gold prices are up, if you read a lot of articles, they're talking about, Indians should feel a lot richer. The only difference is...
It's not used
to spend.
Yeah.
It's just as a store of value. So in your head, perhaps you're going to feel it, but there is the wealth effect that people are talking about India as well.
Absolutely. Well, nonetheless, let's see who actually manages to monetize that gold that they have stored at home. But nonetheless, let's tell you, we have an action-packed closing bell coming up in the final hour of trade. Good day of trade unfolding on Dalal Street. The Nifty is comfortably perched above 25,300 levels. Mid and small caps mirroring the strength. Real estate and PSU banks are the clear outliers in trade today. Follow-up rally on RBL Bank following news around Emirates NBD eyeing a 60% stake in the lender. Both parties likely to have bagged a tentative Reserve Bank nod as well. Details of this CNBC-TV18 exclusive coming up in just a bit. Strong Q2 earnings sent shares of ICICI Lombard and Persistent Systems roaring in trade today. And what's aided those numbers? Detailed earnings fine print coming up on closing bell. And finally, we'll bring you the earnings expectations and what the street is penciling in for the likes of Eternal and Nestle in the quarter gone by.
Right, with that, how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio joins us now for closing strategies. Mitesh, it's been looking good for the frontline index, hovering around the highs that we made earlier in the month on October 10th, and the broader market's doing a lot better as well. So do you feel a lot more confident, or do you believe that a convincing breakout still hasn't happened?
Good afternoon. So, actually, I've been advocating that we will inch up higher, and the first target has been met. 25,350, 400 is a zone, which is what I have been highlighting for the last few days. See, if you join the recent swing high, which was on the 27th of June, we got a closing high of 25,638 on the Nifty, and then on the 17th of September, the 25,423 was the high. If you join both the points, the trend line comes around 25,350, 380. So broadly, this 25,350, 400 zone is what I'm looking at as the first target. We've done that. But the structure of the indicators and averages is positive, which means that if not today, in a day or two, I think in the next 2 days, we should see a breakout beyond these levels. And once that happens, the Nifty should at least try and retest the 25,630 zone again, and then maybe even test higher levels. So the structure is very positive, maintain long positions. On the index tactically, around this level, you might want to take some profits off if you get a pullback to about 25, 250, 280, re-enter. Otherwise, buy on a breakout beyond 25, 400. And on the stock side, I have two long calls. Lodha Developers and real estate stocks are doing well. So Lodha Developers is a buy with the stop at 11.59 for targets of 12.10. And LKM Mindtree, that's a buy with the stop below 55.49 for targets of 56.85.
Thank you. For that, we'll come back to you. Let's talk about RBL Bank. That's in focus. Sources say Emirates NBD is eyeing a 60% stake after factoring in the mandatory open offer. Ritu brings us more.
After Yes Bank SMBC, now we understand Dubai's Emirates NBD bank is finalizing a landmark deal to acquire majority control of RBL Bank, which will mark one of the largest foreign forays into India's private banking space. And the deal could be announced very soon, in fact, in the next few days itself. Remember, the bank is going to report its earnings this Saturday. So we could hear about this as early as that itself. Now, there has been this has been widely reported that the two have been in talks and that Emirates was eyeing a minority stake in RBL, but our sources indicate NBD, the second largest lender in the UAE, is going to announce a deal to acquire as much as 60% stake in RBL Bank, which will include the open offer component that, of course, gets triggered when the acquirer buys more than 25% stake in a company. Now, we further understand NBD plans to acquire this controlling stake through a fresh equity issuance by RBL Bank, which will be done through its wholly owned subsidiary. Now, this is important because the entire investment is going to be then directly infused into the bank, and also because RBL Bank's current foreign shareholding, if you look at it, it stands at more than 22%. So the fresh equity issuance to NBD is going to expand the overall capital base of RBL Bank to ensure that their stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, like you were saying, in line with, of course, SEBI's prescribed formula without a major premium to RBL's current market price. Now, the transaction cannot, of course, happen without RBI's blessing, and we understand this change of control has received an informal nod from the regulator. Formal submissions, of course, will be made once the boards approve this deal. Now, while RBI is not going to relax that 26% voting rights cap, our sources do suggest the regulator will offer a glide path to Emirates NBD, allowing it to gradually bring down its shareholding in RBL Bank. Now, for Emirates, of course, which operates in India through its 3 branches, the acquisition will significantly deepen its footprint in one of the top banking markets. And for RBL, of course, a globally recognized institution, massive capital infusion, and long-term ownership clarity.
All right, thanks a lot for that, Ritu. We'll just get brokerages on that in just a bit. But important news at the bottom of your screen, the EPFO chief has been defending their changes, saying that these changes will be benefiting members. Remember, there was a fair amount of uproar among, a lot of the salaried community on account of these changes. Our colleague Parak has been getting this information from the EPFO chief, who says that 25% minimum balance in PF account is to ensure substantial amount available with holder on retirement. More importantly, for concerns over, increasing the timelines, withdrawal timelines from 2 months to 12 months, they have kept a separate category called special circumstance in case of special circumstances where twice a year up to 100% of the eligible balance can be withdrawn. So that's not to be worried right now or fretted over. We'll get more details on that and perhaps an implication of this in just a bit. But that's important clarification coming in from our colleague who's spoken to the EPFO chief. But let's continue our discussion over RBL Bank. Sudarshan joins in. Sudarshan, the stock's almost doubled in 2025. The brokerages, are they expecting any of this deal making to actually change the valuation multiples that they're ascribing to the stock, or is just business as usual?
So before I talk about RBL Bank, EPFO chief lines that you are seeing on the screen, it's from the interview of the Timsy has done with EPFO chief. Now coming to the RBL Bank, the stock has almost doubled in 2025. And the move that if you see in the last 3 to 4 months, it's up almost 35%. And following today's move of almost 3 to 4%, it has gone to the highest level that we have seen since early 2020. Now, Ritu has told you what's the reason behind the stock move in the last few months, that Emirates NBD is planning to buy majority stake. It might be 51% or 60% stake in the company. But apart from this report, if you take a look at the shareholding pattern also, in the June quarter, both mutual funds and FPIs had majorly increased the stake in the company. Mutual funds had taken their stake as high as to 29% from 19% that they held in March quarter, and FPIs had increased stake to almost 15 to 17% from around 13 to 14% that they held in March quarter. Now, brokerages have come out with some notes on RBL Bank following the reports related to Emirates NBD's plan to buy the stake. Citi maintains buy call with a target price of Rs 300 per share. It says if Emirates goes ahead and buys 51% stake, RBL might see an infusion of in the range of Rs 18,000 to 19,000 crore. And if there is a stake buy of 60%, infusion might be in the range of 22,000 to 23,000 crore. CLSA maintains hold call and target is Rs 260 per share. It says ROA could expand by 25 basis points to 1.2% with this deal if it happens, while ROE may remain unchanged around 10%, and this deal would increase FY27 book value per share by 8% to Rs 318 per share. But you have seen the big move in the stock price, but the interesting part is in the last 4 months of all the trading sessions that we have seen, in 90% of those, stock has been in the FNO Bank.
Okay, all right, Sudarshan, thanks very much for that. So that's RBL Bank, just about touching around 300 odd rupees at this point in time. Gurmeet Chadha of Complete Circle joins in to discuss a couple of stocks this afternoon. Gurmeet, hi, welcome to the show. If you could just start by giving us a sense on RBL Bank. Have you looked at it? How much do you possibly hold in your portfolio? Where do you see it go from here?
Hi, we tactically entered the stock a couple of months back, considering that, and we also entered Federal Bank because these were the two banks available at around book value. RBL was actually below book value a couple of months back. If you see last quarter also, if you remove the treasury gains, the core PPOP has been pretty weak. Even there were more slippages in the retail credit card portfolio, which has been a bit of a concern. The positive news is the MFI portfolio seems to probably have bottomed out. So if a marquee investor comes in, over a period of time, nothing's going to change overnight, but you could see a bit of a re-rating in terms of the multiple of the stock. And that's the reason, the stock has moved up the way it has. But at some point of time, that a lot of good news may get factored in the price, and we'll see how the RBI approval comes in. But it's definitely positive for the stock, and they have been trying to now increase stake in the mix in commercial banking as well as the retail secured credit, which augurs well for future as well. So these are the two banks we do hold in portfolio, more for tactical reason and valuation catch-up.
Right, but what about the post-deal immediate decline? You expect there to be a bit of a profit-taking or cashing out as soon as the deal is announced? Because Ritu is also gathering that the premium may not be as high as what the street may be, factoring in.
Yeah, so I agree, Manglam. It depends on the price at which it happens, and because it's a higher stake, there will be an open offer. So we need to keep a watch on that. And sometimes, they say, buy on rumor and sell on the event which happens. So, as I said, a lot of the move has happened in the stock, but and near-term correction may happen if the price is lower. But as I said, if a marquee bank comes in, the rating multiple over the long term gets re-rated. So fresh investment may not be a great idea, but if you get better entry levels, and let's say Emirates finally makes it, might be just good to look at it again from a medium-term perspective.
Gurmeet, hi, afternoon. I think in the past you've spoken about ICICI Lombard. It's a part of your portfolio, I believe. Stocks done well post numbers. Time to add, or what should you do?
Yeah, so I think insurance, both life and general, have been a bit of a laggard. Then there's been a little bit of concern on when the GST changes happened that insurance companies are bearing the brand. But off late, our channel check suggests that a lot of the disadvantages are now being passed on to lower commissions. And I've been a firm believer that commissions are too high on insurance. You can't be giving 50-60% payouts on a lot of policy. Even some of the medical policies, the industry is, some of the new entrants have started giving 40-45%. I think it's not sustainable, not ethical. And if some rationalization happens, it's good. ICICI in particular, the total ratio has been improving. It was a few years back was 103, 104. Now it's getting closer to 100. In simple language, you want to make more money from underwriting than from investment income. So if it's below 100%, your underwriting makes profit. And these businesses have long gestation. Finally, the trends are coming, and it's also gaining some market share across categories. It's present across categories, and they were very timely in terms of reducing the crop insurance part, which had a bit of an impact on the profitability. So it's pretty solid. These businesses will not give you multi-bagger returns, but very, very steady stock to have in the portfolio.
Can you buy now? I mean, you own it because you got in at a lower price, but at 2,000?
No. So not adding any more, Rima. We own it for some time now.
All right, we take that point. You spoke about them gaining market share. In fact, earlier today, we spoke with the management, Gopal Barchandran, who also said that, they're likely to grow at least 100 to 200 basis points higher than what the market would grow. And the market by itself would, definitely exceed the 7% growth that we've seen in the first half in the second half. So if you put those numbers together, maybe 9 to 12% growth for ICICI Lombard. Let's hear him out.
I think what we'll be kind of looking for is to try and see if we can get an alpha or a growth higher in the range of 100 to 200 basis points. I think that's what we would kind of largely be kind of working towards. But more importantly, obviously kind of staying focused on delivering profitable growth and sustainable return on equity.
All right, we take that point. Gurmeet, before we move forward, you have a thought on IT, how the numbers have been so far versus the valuation, some of the mid-cap IT names, Persistent Systems, for instance, reported a good set. The stock's doing extremely well. We'll hear out the management as well. But before that, your call on it.
So I think you've got to differentiate, Mangam. I think HCL, in fact, reported a very good set of numbers. I'm surprised the reaction was quite muted. They have a nice mix now. The software business now, which they acquired some time back, that's actually a 24-25% margin, which gives a fillip to the overall margin. They, for the first time, reported the AI services vertical revenue separate. So it has a better mix compared to some of the larger IT names in terms of IT services, lesser exposure to US. Even on H1B, I think the number of live H1B they were talking of was some 3,500 or something. And last I had that conversation. So it looks good. Valuation is good. Stocks have been beaten down. So there could be a bit of a tactical bounce as and when the trade deal happens. Right now, I don't think so market is pricing any kind of a trade deal. So maybe from a tactical point of view, some good large IT companies and some of the better mid-cap names like Persistent, Coforge, maybe KPIT because auto is going through a bit of a rough patch, could make sense. But we are underweight right now. It's sub 5% in our portfolios.
Okay, well, let's stay with the IT space. We did speak to the management of Persistent Systems earlier in the day, so let's listen in to what they had to say.
See, at this point of time, what I can say is we don't give forward-looking guidance. But what we have said is our 2 billion journey by FY27 continues. In the last 22 quarters, we have delivered a consecutive sequential growth. Our order pipeline is very, very strong. The couple of deals that are in pipeline at this point of time look very, very promising. If we are able to strike them and happen it, we believe that this should help us in terms of continuing to maintain the momentum. At this point, unless until obviously any unknown event happens, which is not in any of our control, but we'll tackle that uncertainty as it comes.
All right, doing well for Persistent. That stock is up around 6% at this point in time. But Gurmeet, just wanted to come back to you and discuss how exactly would you be playing, this gold price increase or the silver price increase through specific stocks? Anything that you have in your portfolio and which you can share as an idea?
So we have Muthoot in our portfolio, and we were very timely in terms of entering into gold-based NBFCs. So that's played out reasonably well. And we, also started adding, because we also have a wealth management outfit, adding gold ETFs and some multi-asset funds on that side. And probably that helped us, covering this 14-15 month period, which has been a little flattish for the market. Other than that, we haven't really added anything. We also had a look at some of the gold mining funds, which are feeder funds internationally. So that's something we've been looking at. But because of the RBI restriction, there is not much allocation you can do. In general, I believe that precious metals and commodities are in a good cycle, and these cycles are much longer. Only thing is, I think these days, I get 8 calls a day on asking views on gold and silver. Earlier, that used to get on small and mid-cap stocks 6 months back. So it's a bit of an, euphoria going on. So you got to be a little careful in terms of not going overboard in this space.
All right, Gurmeet, thanks a lot for that. We'll take a short break, come back, tell you more on the markets. We'll also have Rashi Talwar on the other side discussing market technicals and fundamentals. A bunch of stocks which are buzzing around right now. Hormaz, as always, joins in to tell us the top movers this hour. Hormaz.
Some interesting movers in the broader markets, and we'll start off with the PSU banks. That's the sector that has been buzzing. The gains have been led by Bank of Maharashtra. It was down 5% yesterday after its results, but it's down up now around 8.5%. And over 8.5 crore shares have already been traded today, 20-day average of just 1 crore. Similar is the case for other banks like Indian Overseas Bank, UCO Bank. Over 1 crore shares traded well above their 20-day average as well. The other stock making a move today is Tattvachintan Pharma. We spoke about this earlier in the day as well, and it's only built on to those gains. 15% higher now for the stock, the biggest single day gain since May. This is the fourth straight day of gains, and during this 4-day period, the stock has gained well over 20%. The volumes are the highest in 3 months. We've had close to 30 lakh shares that have now been traded. The 20-day average here is only 55,000 shares for Tattvachintan Pharma. So making a move on very strong volumes, and as a result of this 4-day up move, the stock has moved past its IPO price of 1,083 and has been a good performer so far in 2025 with gains of around 40%. But what is in very high spirits is GM Breweries, and the stock has been up in 9 out of the last 10 sessions, and these 10 sessions have produced gains of nearly 60% for the stock. Another 10% added to it today, and more than 3 crore shares have traded in the last 5 sessions for GM Breweries, and that includes today's session, which has close to 80 lakh shares that have been traded. The 20-day average is only 9 lakh shares. And this October month has resulted in gains of 56% for GM Breweries, turning out to be the best month since 2017, incidentally, in the month of October again.
That point, Hormaz, thanks a lot for that. In fact, for GM Breweries, this move has been backed by very strong numbers and, more importantly, favourable policy as well. The Maharashtra made liquor policy that was announced by the Maharashtra state does better for GM Breweries than any other listed stock. With that, let's go back to the big story, EPFO. That's gone ahead and eased withdrawal rules to ensure members can now pull out 100% of their balance, including employee and employer contributions. Tim C. Jaipuria quizzed the EPFO top boss Ramesh Krishnamurthy to understand what do the new norms entail. Let's hear out that exclusive conversation. Tim C.
What was felt was that let us make it easy for people to access their own PF money in times of financial need, but at the same time protect their PF for their long-term social security requirements. As you are aware, India is a young country, but all the youth who are going to retire, who are now coming into the work, are going to retire in 2055, 2060. So unless and until we plan for proper social security protection in times of their retirement, then they'll have less of a corpus to be available. So that is why a concept of a minimum balance of 25% was visualized, and that has been kept away as a minimum lock-in balance. Rest of the 75% is freely accessible up to, so if 100% of that is accessible by the member, apart from illness, education, marriage, housing, there is also, we have kept a separate category called special circumstance. In special circumstance, up to twice in a year, you can withdraw up to 100% of your eligible balance. So the 75% is always accessible to you. Now, what used to happen earlier was that you could have withdrawn only small amounts towards illness or something like that. For unemployment, you were forced to take a final settlement. So anything more than 2 months that was available as unemployment, you would have had to exit your PF membership. What was happening was that we were finding that people were exiting their full PF membership. Therefore, what was happening is that they would wipe their entire PF balance completely and they would rejoin after some time. So what was happening was that they were losing out on a very important component, which is called pensionable service. So every time you have left a job, you joined a job and left a job, that is the period of service that keeps on adding to your pensionable service. If you have 10 years of pensionable service, then you are eligible for a pension.
Okay, and don't forget to catch the full conversation at 6 p.m. only on CNBC-TV18. All right, well, let's get Rashi Talwar in now, partner and portfolio manager at Ashmore, to discuss a little more on the markets. Rashi, hi, welcome to the show, and season's greetings as well. If you could just start by giving us a sense in terms of, a little bit of what you think the earnings season has started off with. Do you think, are you happy with the numbers that you've seen till now?
So, I mean, we've got just a very few set of numbers as yet, and essentially in the tech space, and I think their expectations were really beaten down. So what numbers we've got in are marginally better than what was expected, but they're really nothing to write home about. They're still pretty weak, and I think the guidance and the commentary by the companies tends to be about times that are really uncertain, and you can't fault them for that. So they don't know what's lying ahead. So I think from that perspective, the uncertainty for that sector continues. I think as far as a lot of the other sectors are concerned, and especially the domestic facing consumer sectors, people will pretty much look through this quarter because a lot of the action that we've started to see is just very recent, last 2 weeks of September. And therefore, I think everybody's going to wait till the Jan set of numbers or the Q3 set of numbers to really start to see what's happening over there. So if you ask me, I don't think this earnings season is going to be significantly material from a market standpoint.
All right, this earnings season is not going to be significantly material, but I remember you having, among your top holdings, something like an Infosys, HDFC Bank, and Bharti Airtel as well.
We don't discuss our holdings, so I won't get into that, Mangalam.
All right, so let's
talk about sectors.
Let's talk about sectors. What have you made of, the IT results that have come by so far, largely because of this valuation, decline that we've seen there? Some people are finding comfort, and some saying perhaps the worst is over. How would you see that?
Yeah, the funny thing about the IT sector is that you have such tight earning estimates in most cases that the valuation numbers will now look the same for a bit. So, they're not going to change. The point is how much are earnings going to change, and you're just going to see the stock price react to that. So I think, honestly, people are going to wait for some kind of change in outlook or some kind of indication that there is an improvement in the business momentum, or there is confidence that the companies are seeing. Unfortunately, that's not happening.
Rashi, any changes that you've made to your portfolio since the last time we spoke?
So I think in terms of, I don't remember the last time when we spoke, but...
or just broadly in the last 2 or 3 months. I mean, the data points keep changing.
Since about March, we've gone underweight the IT sector. We didn't obviously have any idea Liberation Day was coming, but it worked out well for us. And we went, put that into the domestic consumer names and the domestic financial oriented stocks. And we have always talked about the large private sector banks being one area where we've been extremely positive. So we kind of reoriented the portfolio in March that way, and we've pretty much held it since then because it's played out reasonably well for us.
It's doing well. Domestic consumer names. In fact, Nestle is up around 4% today, ahead of numbers. We have a bunch of others as well. But hold on to your thoughts, Rashi, because we're getting some visuals from our team, which is at the NSE right now for CNBC-TV18's Market Cafe. So we have both Nimesh as well as Nigel out there, along with all the market experts who are joining in shortly. So we will cut across to that as soon as the conversations begin. There you have a bunch of the market experts who are there in conversation with some of the top market voices. All right.
Okay, all right. So that's going to be a glittering event. That's a Diwali special, which you're going to get to listen to soon enough. But Rashi, just wanted your thoughts in terms of this entire GST cut. How do you expect it to probably play out in terms of companies, and by when? And how much do you think your portfolio is probably going to benefit from it?
I think you can't look at the GST cut in isolation. You have to look at the actions being done by the government and the central bank pretty much from the beginning of the year, starting with the income tax slabs. They've had, some of the states have given handouts to women below the poverty line. Then there was the announcement that the Prime Minister made for new joiners to the workforce. Now we've had the GST cuts. On the monetary side, we've had a number of stimulus rate cuts, risk weights lowered. We've had rate cuts, risk weights lowered, and the CRR cut, which is now coming into place, which is obviously providing a lot more liquidity to the banks to lend as well. So not only does there have to be demand, but there is a stimulus on the leverage side as well. So if you ask me, the GST cuts is probably one of the last ones we've seen, but there is a whole string of them. And
all right, Rashi, thanks a lot for giving us your views on the market. We'll keep coming back to you for a bit. Season's greetings to you and your teams as well. But let's cut across to Nimesh Shah and Nigel D'Souza, who are in conversation with some of the top market voices in Market Cafe.
Hello and welcome to this Diwali special Market Cafe Sambat 2082. I'm Nigel D'Souza, and with me, my co-anchor today, Nimesh as well. Well, Nimesh, it's been a difficult year for the markets.
Absolutely.
But we have an elite panel with us today.
Oh, yeah. So happy festive greetings to you, to your family, to all the viewers, and to the distinguished guests as well. All our seasoned fund managers. Nobody needs any introduction. First question will be an open question to all three of you. Anybody can answer, or all three can answer. From last Diwali to this Diwali, Nifty is flat. The returns have been quite good. Did you all expect that India will be a rank underperformer in the last 1 year? And what was the key reasons for this underperformance? I'll start with Anish first.
So, well, two reasons for the underperformance, right? One is that earnings growth slowed down and multiples were to start with. And more importantly, there was a lot of supply of paper, right? So a lot of the argument last year, the people who were extremely bullish were making was that there's a lot of demand for paper. But what hadn't been anticipated was that there was a lot of supply for paper. So while the retail investors might be disappointed, the promoters, the private equity, the investment banking world has done quite well last year because they've managed to put out a lot of paper in the markets.
Vishnu, what's your take?
Right. I think part of the reason, as Anish also pointed out, is expectations are high, right? But we had also started getting into a zone where economic activity had kind of cooled off again. If you go back, say, about 12-15 months back, the Reserve Bank of India had kind of clamped down on lending into, subprime, MSME, etc. So that was one source of funding issues. And then you also had fiscally very little stimulus and support coming to consumption. Over the course of the last 9 months, I think a lot of those have kind of got addressed, right? But the relentless supply of paper and, of course, the curveballs of Mr. Trump and what he tweets on X, keeps us on our toes. So I think a combination of both of these is where the markets are where they are.
All right. Pankaj, I want you to come in it. Over the last 1 year, we have interacted numerous times. And you normally look at the brighter side of things. So could it be that sort of a pitch the last 1 year, which was bouncing around, it was turning, and yet we managed to hold our wicket at least? Do you think it's that sort of year? Because look at the challenges we've had on the global front, on the valuation front, on the paper front as well. So do you think India as a batsman has done pretty okay, given the kind of challenges in the last 12 months?
So apart from what Anish and Harish said, they spoke about domestic side. But we should not ignore that we have seen about almost $20 billion of FI selling.
Yes.
And that's because India was seen as an AI loser. And a lot of money from India flowed out to Taiwan, Korea, China. And there's an AI frenzy for the last 12-15 months, which is happening in the globe right now.
Yes.
In the midst of that, we had domestic challenges, as they said. And last, if you look at indices, they are not portraying the right picture. Indices may be down by 5-6% from their all-time highs. But when you look at the median constituents and the drawdown of those median constituents, it ranges between 50 to 25%. And when you speak to HNI, retail, their portfolios from an all-time high perspective are any which ways down by 20-25, which is the correct portray of the things. So I think along with time, I think you have seen price correction in the broader market space also. And from those challenges perspective, I think a lot is getting priced in now. And I think it is healthy. For a large part of the year, if you remember, Nigel, we were very cautious, saying that valuations are not making sense to us. From March, April onwards, we started to get constructive. And I think a large part of those concerns are priced in. Incrementally, I think we should front load our equity investments as you move ahead in the next 1 to 2 quarters, is my thought process.
Pankaj, you spoke about, AI has not been the big theme. In fact, India has been seen as an anti-AI. In that context, if globally there is an AI bubble, you think this year could be in a way a blessing in disguise for India that we are not in that AI bubble so far?
I think so. And all the data points are flashing absolutely red. We don't know the timing because markets always test you. It's 6 months, 12 months, 18 months. But look at the data points, just 4 of them. The concentration is the highest ever. If you plot the S&P 500, equal weighted index versus market cap weighted index, it's at its lowest point today. That means 490 stocks on one side, 10 stocks on the other side. It's always a risky part. The second is NVIDIA is now 15% of US GDP. Remember 2000, internet was invented. People said Cisco is the only company which will provide hardware. It became 5% of US GDP. And from there, how many years that Microsoft took to come back to the original price. I'm not saying AI will not be there. It will be there for the next 15, 20, 25 years. But the financial market, I think, is pricing far more things. $10 million company getting a valuation of 20 billion. Last 4 years since ChatGPT was announced, you saw 80% earnings growth, 90% capex coming from AI companies. And there's just a frenzy going on. I don't know when the party will stop, but you need to be at the last door at the last door to get it out. I think in that respect, India could be a beneficiary where it's a diversified market. Look at Taiwan, TSMC is 55% of MSCI Taiwan. One stock index. Samsung, 30% of MSCI Korea. One stock index. So when this party will stop, I think a large part of that money will come into diversified markets, which are much more sustainable and structural in nature, which I think is India.
All right, Harish, let me come across to you. The other problem has been the FI selling, right? I mean, we talk about them selling $20, $23 billion just in the last 12 months or so. But if you look at the primary market, actually, they're put in close to around $5 billion approximately. What about this IPO frenzy? Everyone talks about it, it's sucking some liquidity as well. But is most of that now a known devil? We had a couple of big IPOs that people were worried about, which have gradually got digested. And thankfully, getting into Diwali, at least those that got LG will be a little bit happy because at least it's giving some kind of positive rub-off, you know. Your take on this IPO frenzy as well.
Right. So India is one of the unique markets which globally is seeing a lot of new listings coming through. Most of the rest of the world, the IPO market is pretty much dead, right? So that is one unique aspect. The second unique aspect, especially in the IPOs that we are currently seeing, is that there are a lot of scale companies which are very, very differentiated, which was not there, even 6 months or 9 months back. So while yes, the number of issuances, etc., are large, the type of businesses that we are kind of encountering now are very, very new and do not have, in many cases, a parallel to what is already present in the market, right? Now, of course, valuations is in many cases nosebleed level, okay? But given the fact that there is something unique and differentiated that these businesses bring at scale, I would imagine that, you know, a lot of the legacy holdings of many FIIs, you know, which have been traditionally in the banking or the IT services, or maybe in the last 5 years, a lot of money has gone into the industrial theme, which has done very well. I think those will be the areas that, you know, people may want to kind of reallocate and move into this. So that is one key aspect that's coming through. The second key aspect is in terms of sheer number, just to put it in numbers, currently we are kind of selling, supply of paper is roughly about 2% of market cap if we were to quarterly annualize this number. This number, the last time we saw such huge numbers was in 2017, okay? And we all know how 2018, 19, you know, we had to digest all of this along with expectations running very high in 2016, 17. So I suspect that, you know, it's not that, you know, we are at the tail end of the IPO digestion problem. I think it will continue to be coming through in the course of the next 6-7 months. And which means, in my opinion, even though the fundamentals are stacking out much better, it does appear that it's going to be a grinding market. The sheer supply of paper is going to keep a lid on any kind of a very big kind of a move up. But we think that, there are markets when, consolidation is a good thing, because especially when the fundamentals are improving, and that therefore is a great place to allocate and to accumulate very good quality equities at this point of time.
Anish, my first question was on what went wrong and why India underperformed. You highlighted some of these concerns. Let me just ask you on the 4 big concerns, and you give your view. Are they behind? Is the worst over? What is it in terms of earnings, in terms of valuations, in terms of global headwinds, or whichever the key headwinds were for last year? Your take on all the 4-5 concerns, and are they now behind us? And what is the take now?
See, of these, the most important for me is earnings. Right?
Is earnings?
Earnings, right? I think earnings should pick up momentum. Okay. What had happened was that, one, the economy slowed down a little bit. And two, what we had seen, right, was that 2 years prior or 3 years prior, what had happened was earnings growth had outpaced revenue growth, which happens when capacity utilization is improving, you're getting operating leverage, and that obviously tapers off. So that tapering off also happened, and demand was weak.
So net on earnings, you're comfortable that now there is going to be a pickup?
I'm reasonably comfortable on earnings. I'm expecting the economy to...
FY27 going to be a good year for earnings?
I think FY27 for large cap stocks should be a good year for earnings. Sure. Now, I would caveat that. Actually, what I worry about is that in the small and mid cap space, there's a lot of paper that has come on the market, not just primary, but secondary also, which has come on the market with very poor quality of earnings. Right? Okay. If you look at the balance sheets of those companies, they've been, I feel, very flattered. Those earnings will disappoint, right? So I would not say that there's a uniform improvement in earnings, because the poor quality of earnings will I say there's hardware, there's software, there's vaporware. The vaporware will vaporize. So that part you have to be careful of, but the economy should regain momentum and earnings should pick up.
Point taken. On earnings, which are the other concerns which you feel now it's turning around?
No, I think for me the most important concern is earnings. I don't think tariffs are a big issue. Our current account deficit is in good shape, and as long as the current account deficit is in good shape, a few specific sectors which are not very big, like textiles experiencing some problem, doesn't change the shape of the overall market. And I'm not worried about tariffs being put on the bigger sectors like pharmaceuticals or IT. I don't think the US economy can absorb putting a tariff on those.
All right. So I think we have consensus that the last 1 year was challenging, but now we're gradually getting more constructive that the next year or so will be fairly positive. Talking about these tariffs issues, Pankaj, let me come across to you. Because economically it may not be having a big impact. However, those animal spirits to come back, for people to get more excited about the markets, you'll want to have a deal with Mr. Trump. How important is that? And do you think now we have faced bulk of that music? He'll have to come up with something new now to scare us. 25% became 50%. On the tariff front, do you expect some kind of a breakthrough to come through, given the time that we have seen, and also given the kind of commentary, which, to be fair, is a little bit heartening, a little bit more positive?
So, to be honest with you, any speculation is above our pay grade, right? We all thought that in April we are first in the queue. And suddenly what happened that we are last, and with a 50% tariff, which is one of the highest, right?
Yeah.
What will change also, we will not know.
But hopefully the worst is behind.
Worst is behind. That's what the sense we are getting, right? And the sound bites which are coming are quite positive.
Hopefully.
We are building in that the penal tariff will be out. Reciprocal tariff remains. But there are certain section of market which has started to believe that that final tariff could settle between 18 to 20%.
Yeah.
If that happens, I think market is still not pricing in that. Sure. And that will be a very, very positive outcome. But let me give you a real ground situation. You speak to textile guys in pain. Yeah. You speak to gems and jewelry guy in pain. So there are certain sector pockets of economy which are really, really badly hit, and they are employment generators.
Right.
So I think we need to solve this issue sooner than later, so that the animal spirits are back both in economy and markets. Today, when you speak to exporters, they don't know what is happening, and the consumer confidence, the CEO confidence index which we track, it is at the lowest point ever been in the last many, many years. So I think it's for the global economy, local economy, that tariffs issues get resolved. And I think it will. Don't forget, next year is midterm election. Yeah. And he wants a good image for himself as well.
Got it. Harish, help me.
Welcome back. Well, 25,330 is currently where the Nifty is at. We have the mid-cap index, which is marginally outperforming, so up around 1% at this point in time. Good time then to get in some BTST calls. We have Mitesh Thakkar joining in to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, over to you.
Yeah. So I have a BTST on IIFL. It's moved well now at the day's high. Keep a stop at 503.5. Look for target of 514. And LNT also, I think, similarly breaking into fresh high. It was slightly off the day's high, but still looking good. So BTST here with the stop at 38.10 for targets of 38.50.
All right, Mitesh, thanks a lot for that. Let's take note of the earnings that are likely tomorrow from Nifty. We have two companies, both Nestle as well as Eternal. Both of them actually doing well in today's trading session, though Nestle is about 10% away from its 52-week high. Nothing expected from this quarter. For all the FMCG companies, growth starts from quarter three onwards, but the street is pricing that in already. So 3.5% revenue growth is what the street is expecting this time around. EBITDA absolutely flat, which implies a margin decline of nearly 90 basis points. And the net profit on an unusual gain in the last quarter optically looks like a decline of 28%, but the absolute number between 700 to 710 crores is what the street should be watching out for. Apart from that, the impact of GST trade trade transition would be close to around 350 to 400 basis points on sales. So had that not happened, the sales growth would have been around 7 to 7.5%. The other part is there has been 3 to 4% growth in domestic business that the street is working with, 7 to 10% growth in exports, domestic volume growth seen between 1 to 2%. But commentary on demand post-GST, raw material inflation, pet care growth and strategy from the new leader, Manish, will be extremely important to track on Nestle. For Eternal, the stock is at a record high. It's been doing very well ever since the first quarter earnings, and more importantly, the management commentary out there as well, when they said that food delivery growth has bottomed out and it's likely to expand from here on. And at the same time, losses in Blinkit have also maximized. From here on, they will only reduce. And the street's factoring that in. 66% jump in the revenue is what most analysts are working with, closer to 8,000 crores. The EBITDA, however, grows just about 13% because the excess savings would be put back into expansion of the network in Blinkit, and the net profit declines by about 21%. A large part of that also attributed to non-cash depreciation. Food delivery GOV growth seen between 18 to 19%. Same time last quarter, it grew about 16%. Management believes can grow faster. Blinkit gross order value grows between 130 to 140%. That's a big positive. But EBITDA will be lower due to store expansion in Blinkit. So Blinkit store expansion could be anywhere between 1,775 to 1,800 stores as compared to 1,550 stores that we saw in the last quarter. So all those factors important to track for both Nestle as well as Eternal. For Eternal, more than the reported numbers, what the management feels about competition would be even more crucial to track. All right, with that, we'll take a short break. More stock talk on the other side.
welcome back. Well, 2 minutes to close for trade. We do have Mitesh with us. Mitesh, I was looking at a stock, Man Industries, that seems to be doing well today. It's up around 10.5%. It's gained around 23% this year. Any view on that particular stock?
So I think today, looks like some kind of a strong reversal. In fact, last few days, the stock was slightly on the negative side. And 370 was a weekly support. It's kind of bounced back from those levels. Yesterday's closing was 364. I think the stock can advance to about 450 to about 460, which is where the stock has had two swing highs, which was one in July and one in September. So that's the minimum target which I would look for. And on the downside, as long as the stock now is about 387, I think maintain a positive bias.
Midcap IT, good session. While Persistent is up 7%, look at Coforge, LTI, Mindtree, Hexaware, Emphasis. Strong volumes, 3-4% higher. Mitesh, any stock that you like here?
So I think, we had a buy on LTI, Mindtree, and I do like Coforge as well. Very good technical setup over here, if I can put it that way. I was looking at a target of around 1790 and then about 1825. I think it's heading towards these two levels.
Thank you very much for that. Well, it brings us to a close of today's trading session and a strong close. The Nifty ending above 25,300, a gain of nearly 200 points. But I think the Diwali...
Yes, in fact, let's go across to NSE where they will be ringing the closing bell from there. So let's cut across.
हाँ बजाएंगे ना लास्ट के
Well, we are at the NSE, so no better day. And going by the market performance, it's a good day to ring the bell from here at NSE itself. The Nifty ends in the green yet again, and hopefully we get past that resistance mark that we're looking at. Well, gentlemen, we're almost there. 40 seconds to market close. The feedback that we've got has been it's been a pretty good day, Nimesh. And hopefully, in fact, those flows come back. FI is a net short in the system as well. And we've seen various pockets today that did well. Breadth of the market as well, fairly good. But we've got the final 30 seconds, I think, of trade. So let's wind down. 20 seconds to the end of today's trading session. And I'll tell you what, getting into the Diwali week, it appears the bulls, they're already in the festive mood. Lighting lamps is going to be starting next week. But I think for the time being, portfolios, they are brightening up at least. Well, let's go for the countdown. 8, 7, 6, 5, 4, 3, 2, 1. Well, that's, end of today's trading session, but we've got lots more to talk to our guest about. And since Vikas joined us a little later on the show, Vikas, you think the time has come, brighter times?
Okay, and we're going to keep getting all of that perspective soon enough. This is just a quick wrap in terms of what the markets did in today's trading session, and definitely a very good day because we had the Nifty, which closed above 25,300. No complaints coming in there, up around 178 odd points. We did recoup back above the levels of around 25,310, which was an earlier high that we had hit on the 10th of October. The mid-cap index up around 1% in today's trading session with a good advanced decline ratio, which stands at around 2:1 and has been steady for a large part of the trading session. In terms of specific stocks, we had a lot of the consumption plays doing well. So Nestle India comes out with numbers tomorrow, up around 4%. Asian Paints, which was up around 2.5%. And a couple of, even Trent, in fact, was up around 2.3%. Financials were the other ones which were in focus. So Bajaj Finance up 4%, Bajaj Finserv up around 2.5%. And on the downside, we had a couple of other stocks. IndusInd Bank, which comes out with its numbers this Saturday, that stock was down around 1.4%. We had Tata Motors X, the CV business, it was down around 1% post the demerger. That stock, went X demerger yesterday and showed a little bit of a downtake today. Separately, Infosys still to come out with its numbers, down around 1% in today's trading session. TechM was down around 0.6% post its numbers. From the broader markets, what really stood out were a couple of these these result reactions. So we had ICICI Lombard, which really stole the show with a 9% gain today. Persistent Systems, which is up around 7% in today's trading session. On the downside, Sion DLM lost around 6%, and we had a couple of others from the pharmaceutical space which did see some amount of profit booking. So Aurobindo, Wockhardt stood out. KEC International also was down around 0.7% in today's trading session. But overall, good trading day. Start off to the countdown to the Diwali was definitely a positive. Let's see whether that sustains going into the next two trading sessions for the week. Well, it's a wrap on Closing Bell. Our special conversation with the market experts on Market Cafe continues next. Stay tuned.